Good morning, good afternoon, and good evening, and welcome again. And thanks for joining today's webinar about the rising value streams of energy storage. Today here with us is Peter Lowe from the Faraday Grid. He will give a presentation on the rising value streams of energy storage, about the pairing of renewables with battery storage, cost trends, rising value streams, constraints, challenges for energy storage. Today's webinar is part of a bigger webinar series in the name of Future Grid Week, which is this week. Coming Wednesday, we'll also have a webinar on grid-connected microgrids by Wouter Vermeijden and Demi Jampanic from E.ON and Zone. They will tell about their case studies in using grid-connected microgrids. And Friday, we will have Tobias Harburger from Continental presenting on floating solar PV on water reservoirs. This is all related to our Future Grid Labs, which we will host in December. On the 6th December, we have grid-connected microgrids. On the 12th of December, we will have the economics of energy storage. And on the 14th of December, we will have a lab on floating solar PV. These labs are half-day conferences where we'll gather the front-running case studies in these specific topics and learn from them, discuss them, and form networks around them. This week is Future Grid Week. Besides 3 webinars, we'll also have a special discount for these Future Grid Labs if you register before the end of Friday, which is 4 days, 11 hours and 56 minutes from now. Using the promo code FGWeek-20, you'll get a 20% discount on your purchase. Besides that, we also have a lot of free content. The webinars, you're watching a webinar, so you know about it. We also have reports and regular articles. So please check out our content page on thefuturegrid.com. So back to today's webinar with Peter Lowe, the CEO of Faraday Grid. He will talk about the rising value streams of energy storage. He will tell you everything about it in the coming 30 minutes. Peter, I'm going to hand you control right now, unmute you, and then the floor is yours.
Thank you, Thomas. And hello to everyone. I'm just waiting for the slides to come up.
You're good to go.
Excellent. So, yeah, I can't see the slides, Thomas, just now.
You should be able to see them right now.
Ah, yes, here we go. Okay, sorry about that, everyone. Yeah, listen, we're going to tackle the subject, the rising value streams of energy storage. I work as the CEO for the Faraday Grid, a wonderful company. It's making new discoveries every day. We just go through to the contents here, structured in 3 parts. The pairing of variable renewables with battery storage, cost trends and rising value streams, and some of the constraints and challenges. But before all of this, what I wanted to do is really just work through some of the fundamentals, just to set the framework of this talk. I wanted to start firstly by sharing that most of us on this call are all majoring in energy. Congratulations on that, and that all of our work has a vital link to the economic prosperity of the world. The regression analysis of average annual percentage change in world energy consumption versus world GDP is highly correlated. Gail Zweiberg from Our Finite World calculates an R-squared correlation coefficient of 0.74 since the year 1820, the advent of the fossil fuel power generation. So the correlation there is very strong indeed. And what this means for all of us is that we have a tremendous responsibility and purpose in ensuring that ongoing economic prosperity of the world. Our decisions today will in fact impact the generations to come. If we look at the macro environment, the nature of the generation supply is dramatically changing. Bloomberg New Energy Finance forecast a radical shift in the balance of who is providing electricity generation. So today there is roughly 2/3 fossil fuel-based power generation, gas, coal, oil. But moving forward to the year 2050, we see a world where 2/3 of it is now powered by zero carbon forms of power generation. Yes, nuclear, yes, hydro continue, but wind and solar, interestingly, together comprise 50% of that by 2050. A framework limiting global temperature rise was first outlined by the Yale economist William Nordhaus in his 1975 paper, Can We Control Carbon Dioxide? And that concept has since been stressed by the Intergovernmental Panel on Climate Change, and again, more recently in 2015 by the Paris United Nations Framework Convention on Climate Change. However, even with forecasts of substantial clean energy by 2050, Bloomberg New Energy Finance believe we are on the course of missing the established target of global emissions. This target would have ensured the level of atmospheric CO2 concentration to remain below 450 ppm, the point at which we limit global temperature rise to 2 degrees Celsius. Surpassing this level is argued by some to increase risks and even cause catastrophic impacts to our planet, giving rise to the more stringent 2015 Paris Agreement goal of limiting global temperature rise to 1.5 degrees Celsius. We also have a legacy power grid that's been around for 139 years, based on the discoveries of William Stanley. This is a hub and spoke grid, where a model has seen power stations transmitting power over large distance to end consumers. Generators within this grid infrastructure have also been responsible for providing much of the balancing, both in terms of real power, but also power quality, and an act that ensures that the grid has been stable. Typically, this generation-centric model of balancing is controlled by the droop settings on a generator. It is a legacy grid for old brown electrons, which hasn't been purposed for new green electrons. With more variable renewables, wind and solar on the grid, there's essentially more noise, more signal noise in the electricity that's coming through. There's volatility in the power itself. There's also volatility in the power quality, such as voltage, frequency, harmonics, and so on. This volatility requires balancing, i.e., how do we control Benjamin Franklin's lightning? Currently, much of this balancing is starting to come from flexibility. We see the rise of gas gensets across Europe, gas peakers, some of which are now qualifying for capacity mechanism. The subject of this talk today, the battery storage, energy storage, there's demand response, there's distributed energy resource management, there's virtual power plants, and so on. So if you imagine all this noise in the signal today, what would that mean for our system by the year 2050 with all that variable renewables? This chart on the left-hand side illustrates the delivered electricity price to end consumers, largely in disaggregated markets with reasonably high penetration of variable renewables. You can see the proportion of non-wholesale energy costs are typically a combination of grid services, such as use of system costs and balancing services, and also an additional layer comprising government intervention, such as feed-in tariffs for renewables, capacity markets, etc. These are the costs that are rapidly rising as a result of balancing more volatility in the system. If we take a trip around the world, we can see that the proportion of non-wholesale costs to an end consumer bill are on the up. In Germany, this is 81%. Australia is 69%. The USA, on average, is 41%. But in some states like New York, this is markedly higher. And the UK is currently around 53%. We can see from this historic data that as more variable renewables is deployed, the non-wholesale proportion of the bill is seen to rise. Cost of balancing in the UK, over £1 billion sterling in 2017. Various forecasts on how this will move in the next few years. Some say it may indeed double within 5 years. The balancing services are segmented into various sub-services, and constraints and frequency response formed a significant part of the £1 billion sterling in the UK market in 2017. Ultimately, the cost of balancing services is passed on to end consumer electricity bills. If I was to take an example from the Great English Library of Literature, and if I was to quote Charles Dickens, and I will do now, but if you look from one of his novels, A Tale of Two Cities, from 1859, I think it really sums up this dichotomy that we're facing today. We have renewables, which is great, and clean energy on the one hand, and yet we have the fragility of legacy grids and rising balancing services on the other. And he writes in his opening lines of A Tale of Two Cities, "It was the best of times, it was the worst of times, it was the age of wisdom, it was the age of foolishness, it was the epoch of belief, it was the epoch of incredulity, it was the season of light, it was the season of darkness. It was the spring of hope, it was a winter of despair. We had everything before us, we had nothing before us. We were all going direct to heaven. We were all going direct the other way." So, in terms of the possible pairings here, Bloomberg New Energy Finance forecasts the world's electricity generation will comprise 50% wind and solar by that year 2050, and a potential pairing to balance the volatility there through battery storage could be an investment in the order of $548 billion by this time. I guess when we talk about utility scale battery storage, the provision of balancing services provides a future stream of real option value to the investment case. And it's changed from a world where the risk used to be very de-risked, and the returns used to be very well known through power purchase agreements, through tolling agreements for thermal generators, for example. But in today's world, that risk has spread. The standard deviation is much larger, and the returns come from a number of value streams. I guess for me, accelerating the investment case, a key aspect is if the storage can delay or minimize or remove expensive power grid reinforcements. In an economic sense, this would be a perfect storm. You would have access to the future value streams through the balancing services and the ancillary services markets, and you would also have the underlying certainty of removing the expensive grid reinforcements. And in some cases, you can see internal rates of returns in the high double digits and payback periods of less than 3 years. We just take a short moment just to consider the cost trends of battery storage. According to Bloomberg New Energy Finance, they have seen a 79% decrease since 2010, with a further projected 67% decrease by the year 2030. On a specific cost basis, battery storage has declined from $1,000 per kilowatt hour in 2010 to $230 per kilowatt hour in 2016. However, what's really interesting is in McKinsey's analysis is that the balance of system costs have actually declined faster, at a faster learning rate in the recent past than the actual battery cells and packs themselves. So these balance of system costs are reductions in the price of inverters, wiring, containers, climate control, and other hardware. The soft costs of development and procurement also reduce with standardization, and also helps to optimize the cost of execution. The engineering, procurement, and construction costs also fall. The technology basis, duration, power, and energy density characteristics of a battery also play a role in pricing. So these rising value streams, where are they, and what do they mean? This slide sort of talks through some of the sort of primary value streams in battery storage. And according to McKinsey, these value streams are rising in response to more volatility. In the UK in 2017, the maximum ramp rates are 10 gigawatts per hour up and 11 gigawatts per hour down. This represents roughly 1/3 of the UK gas fleet turning on or off in an hour. By the year 2040, the highest ramps will be 21 gigawatts up and 25 gigawatts down, equivalent to around 20 to 25% of the UK's entire generation fleet turning on or off in 1 hour. There will be increasing opportunities for fast ramping resources such as energy storage, certain types of demand response, and gas generators to support needed levels of ramping. Extreme ramp rates are likely to stress the system and also cause conventional generators to operate less efficiently. Flexible demand and storage may be able to help mitigate these impacts. Typically, the value streams concentrate in the areas in the slide, and on the whole, I sort of treat them as a series of option value streams. So a lot of these option value streams are probably valued by traders in the liquid window and beyond. So we take number one, energy arbitrage, buying low, selling high, perhaps in relation to time of use style tariffs, such as the US, within the duration range of the battery. Recently, there's been more movement towards hybrid batteries with a primary battery and a secondary battery. And what that allows you to do is be able to size the battery duration and characteristics to capture a range of potential outcomes and therefore optimize the option value window available for monetization of the asset. Number two, ancillary services, frequency and voltage regulation. For example, to compensate for voltage rises during peak solar PV generation or voltage drops while meeting peak demand. Number three is variable renewable smoothing in combination of solar and or wind farms. In some parts of the world, such as India, penalties for being outside of nomination are being introduced for variable renewables, and the range of actual delivery permissible without attracting penalties is narrowing. So there's a use case there. Number four, local capacity, when this is required by design for resilience reasons. Number five, network upgrades is quite a fundamental one. Delaying, minimizing, or avoiding them altogether could be one of the biggest drivers in the underlying economics, depending, obviously this is site location, network location specific, but it could help materially de-risk investment decision, especially for utility scale deployments. The payback can be sometimes be within 3 years in these cases with strong double-digit rates of return. Number six, you can reduce demand charges for the I&C segment during peak periods for end consumers there. Number seven, increasing variable renewables, self-consumption rather than importing power from the grid is another feature set. Number eight, for backup and reliability reasons. For example, you may see more data centers coming on stream that have backup battery storage that might be also dispatching these into disaggregated energy markets and allow secondary income streams to come through to that business model. And finally, number 9, a battery can also be optimized to export back to the grid in relation to electricity prices, for example, time of use. Generally, the dispatch decision can be preset according to rule sets within the control layer of the battery, and follow a ladder of logic as to when to dispatch. This ladder of logic can be adjusted by seasons in response to a change in market structure or price signals to maximize self-consumption of renewable energy, or in relation to market price signals to maximize the economic returns whilst exporting back to the grid. A key phrase often used in battery storage is the stacking of services, which might seem to describe that these value streams occur in parallel. In reality, the battery functions generally in series to capture these value streams, so it switches from one mode to the next mode according to demand. Just very briefly then, if we come on to the constraints and challenges, the visual capitalist suggests that 7% of the rechargeable battery market is expected to be comprised of lithium ion by 2025. So what are some of the constraints here? On supply chain and raw material supply, there's some concerns around the resiliency and social economics around cobalt, graphite, and lithium. 65% of cobalt is mined in the Democratic Republic of Congo, which is deeply politically unstable, and graphite and lithium pricing is sensitive to supply and demand, which might introduce a sense of a requirement for a more abundant range of raw materials and choices for the battery manufacturing process in order to meet future demand. Some other constraints typically include the total number of charge and discharge cycles over a battery's life. If the battery was to balance the ancillary and the balancing services market, there may be frequent charging and discharging, which may degrade a battery more quickly. Number 3, batteries do degrade in performance over time. So there needs to be either potential oversizing upfront or a replanting strategy towards terminal life. Number 4, there is on occasion a minimum reserve capacity in some battery technologies, which may also limit the potential of full 100% charge discharge cycles. Number 5, the duration of battery storage can also be a constraint for applications, both in particularly short and in longer duration market requirements. Number 6, where there is a need for heating, ventilation, and cooling, this represents a parasitic load to the cycle and therefore an impact to round-trip efficiency. I think really, a diverse range of energy storage is required as part of this new ecosystem, helping to balance variable renewable energy. We're likely to see consolidation in the energy storage space over time, and you can see some of these in the M&A deals in the press that illustrate that in recent times. And I think as prices commoditize, it'll be system thinking type of companies that can best articulate and deliver more sustainable value. These are the companies with optimized soft costs, higher operational efficiency, and who are also able to combine these with other flexible technologies in smart ecosystems. This would be in order to deliver optimized outcomes for consumers. If we step back again, what is the higher level causation of this? The legacy grid is fragile and designed for old brown electrons. The new electrons are green. They're inherently volatile. They cause noise on the pure sine waves on the grid with respect to power and power quality. So what would an anti-fragile grid designed for new electrons look like? Well, we believe at Faraday Grid we have designed it. So basically the Faraday Grid doubles variable renewable energy hosting capacity of the power grid and simultaneously addresses the energy trilemma in a manner that is agnostic to supply and demand. We replace the passive voltage management devices on the existing grid, for example, transformers, converters, rectifiers, with a device we call Faraday exchangers that work autonomously within a Faraday grid. We take the noise caused by variable renewable energy out of the electricity signal. High fidelity simulations show we resolve 40% of the UK's balancing market and remove constraints which restrict the output of wind and solar, therefore a universal application. We positively impact the transmission network use of system charges, fast reserve, short-term operating reserve, footroom constraints, reactive power, frequency response, distribution use of system charging, renewables curtailment, T&D loss, reduction of CO2, and capacity market. Storage solutions can be made more economic and productive on a Faraday grid. We provide instant response for the fraction of a second it takes for storage to kick in, and we eject inertia into the grid that storage cannot. The Faraday grid may help accelerate a better outcome to any reference global temperature rise targets. The adoption of the Faraday grid on a global basis provides a platform to enable a diverse energy mix, something that the current grid does not. Ultimately, we resolve the energy trilemma by addressing causation and not band-aiding the symptoms. Thank you.
Thank you, Peter. And before we go into the first questions, I wanted to tell the audience that you can use the question box in the software to submit your questions, and then we can go over them during this Q&A. So, well, Peter, the first question came from Thomas Boersma. He said vanadium costs are increasing. This is affecting the capital cost of vanadium redox flow batteries. How is it reflected in the 30 or 230 kilowatt hour price? And maybe on a bigger scale, how do you think prices of raw materials are reflected in this price, and what do you expect to do this to the price?
I think generally, I wonder if I could use a Elon Musk kind of response to this, but I guess if you look at the raw material prices on its own, looking at the quantums and sort of from first principles, you can sort of like look at the quantities of this in a typical battery storage unit, and then you can see where we are today versus where we could be if everything else became a lot more efficient. And I think that might be the way I would probably look at that across a number of materials, is perhaps looking back at the raw costs and then seeing what's the delta there between what's being offered in the market today and historically, and just seeing how that's come down. But I think ultimately, there's perhaps room to go down further. Next question.
So there's a question about the Faraday Grid solution. So what does it exactly do, and where can it be applied within the grid? So where do you place it within the bigger picture of the grid, and what are its limitations to do?
Yeah, so basically where we would typically be looking to deploy these is within the distribution network. I think we see that's probably where there's a lot of requirement for balancing, a lot of the distributed energy resources that are coming through. But having said that, as we scale up the exchangers in due time, then as applications across the grid, including connections with winds, offshore winds at larger scales. But at the moment, we are quite focused on the deployments in the distribution network for the reason of the growing value that would be to DNOs within the system, and also their part to play in moving from a transition of DNOs going to DSOs and DPOs, etc.
Exactly. So the DNO or the DSO is at this moment your main target customer.
That's
but
correct.
It also has applications for generators.
Exactly, and across the transmission grid as well.
All right. And next question comes from El Mehid Bassin. What are the applications of hybrid batteries across the grid? He asks.
Yeah, so I think if I was to abstract this a bit more, put yourself in the seat of an electricity trader. You're obviously valuing where we are, I guess, in the what we've seen already in terms of balancing services, ancillary services, and where we capture the most value. If we have, say, for example, a primary battery with a 3-hour duration, then it can capture more of the market in that longer sense of the market. If we have a secondary side as well, and that battery, say, could be of a smaller capacity, but it might have a different duration, for example, half an hour, and it might be, it may be a better position to capture some of the shorter sort of movements in terms of balancing. So basically, you're optimizing the design in terms of perhaps the capacity, but also the duration, and perhaps some other characteristics. And having 2 batteries to play with gives you perhaps more option value that we talked about earlier, in terms of a strategy that kind of provides a bit of diversification in that portfolio.
Okay, thank you. And there are multiple questions still coming in about the Faraday Grid solution and how it actually works. So the outcome is understood by most of the audience, but how does it actually operate, and what are its principles of operation?
Yeah, I think just given that is a sizable chunk of our intellectual property, I can't exactly address how it works, other than we have had it independently validated by PNDC, a test center in the UK. And we also have a simulation team here as well that have looked at the physics of this, and working closely with our commercial teams, we've sort of articulated a lot of the value contribution that we can do. And for those of you that are interested, I've written a short blog article on the Faraday Grid website, which provides more articulation of those value streams that we impact. So hopefully that is useful to you. But basically, the design principle we use is a methodology called design by rationalized constraint, and what we're doing there is looking at causation rather than looking at what the symptoms are and then trying to address the symptoms. We actually go back in time and look at the underlying physics. So the innovation there is in the underlying physics, and it addresses cause rather than symptoms.
Okay. And is it used instead of a transformer, or in addition to a transformer?
It's used in place of a number of passive voltage management devices, so not just replacement of transformers, but converters and rectifiers, StatComs, etc. as well. Basically, we have a lot more functionality than a transformer. So to compare us to a transformer would be underselling what we can actually deliver as a service to the grid today. Obviously, we keep a lot of the wires, the existing wires there, the overhead lines, the underground cables. So we're not replacing that, but we're almost acting like a internet router. For telecoms, we can produce that magnitude of change.
Okay, and yeah, there's a question coming in. Can it be installed at transmission level as well? And I think I already heard you mention that it has applications in the transmission level.
I mean, we've already proved out that it works in the physics, and then after that, it's just a matter of scaling. So we're focusing on the distribution network at the moment, but we have other projects in the pipeline in terms of other markets, other segments, and other applications as well.
Okay, And what kind of information and communication protocols are required to implement the Faraday Grid? Is it equivalent to a blockchain protocol, for example?
It's different from blockchain. We have a platform that sits above the exchangers, and basically the idea there is that these exchangers are largely autonomous within the network. So depending on the sensing and the environment around it, it's able to sort of act on its own. But in terms of platform, we're developing the emergent structure above that. But it's a different vehicle from say a typical sort of blockchain construction, and there's more details than that within our website. So I'll point users there.
Okay, and well, I get a question following up on our previous question. It states, to be very clear, your device is only for DNOs and not for RE developers. So RE developers just have to wait for it to be deployed, or can they deploy it themselves?
That's not true. I think we're also looking at the generation space as well, and this work that we are progressing at the moment on that front. As well, we see many applications of this technology, and I wouldn't limit it to just DNOs. That would be the wrong impression to give. So I'd just like to correct that.
Okay, that makes it clearer, I think. So that's helpful. And back to just battery costs. So not just about the Faraday Grid solution. We have a question: can a battery recover its cost today by pairing it to renewables? And are there any cost synergies? So do you see a valuable business case for solar plus storage applications, for example, or with wind?
Yeah, I think it's very market specific. The obvious one is like where there's islands where the price of energy is very high, and you're displacing diesel gensets, for example. There may be cases that make that sort of comparable a lot easier. We are seeing a lot more vendors offer package solutions, so solar plus battery, or wind plus battery, or wind plus solar plus battery plus gas gensets. There's a lot more of that coming on to the market with respect to, in particular, microgrids, and I guess it's all in the initial design and setup, and also where you see the market prices trending as well. Whether it's in the money compared to status quo of just having a grid supply, or whether with improved resiliency that there's value taking into account the market pricing if energy storage goes down. I mean, the hard and the soft costs are coming down, both in the battery side and the solar and the wind side. And I guess it's just how the market prices are also constructed around that to see whether it's a positive investment decision or not.
Okay, thanks. Back to the Faraday Grid. So question coming in from Paul. How does Faraday Grid apply to managing very high power electric vehicles? So both commuter and increasingly large commercial and transit, and then especially looking at fast charging.
Yeah, I think electric vehicles, depending when they charge and so on, it could potentially place a lot more stress on the grid. And I think what we do is that we improve that sort of host capacity of the grid. There'll also be other sort of time shifting of when EV cars or vehicles can charge, but generally we're very well set up to deal with the future of energy. So not just variable renewables, but electric vehicles as well.
Okay, so on to the last question, and I think if people still have questions after this, they can either email me or contact Peter, and I think we're both happy to go on in the discussion after the webinar. So for developers, I think this is a question that comes back more often. How can the Faraday Grid solution be implemented in the renewable energy project? So, and is it already feasible product now, or should they wait a couple of years before they can actually use it in their, well, for example, wind or PV plants?
Yeah, no, that's good. It's a good question. I don't know if you've seen the announcement with UKPN, for example, that's on our website. We'll have some of the first live exchangers going in to a live UK network by the spring of next year. We have development plans on top of this to look at all of the other markets that we can get exposure to. We're keen to discuss with renewable generator developers and how we can help them in terms of being able to be more than just a connection to the grid, but how we can also help perhaps monetize other services for them as well. So maybe that's an offline discussion with myself, with whoever's interested in due course.
Yeah, exactly. I think we added your email address to the slide, so I think if people have really specific questions, I think it's best to discuss that one-on-one. And for me, thank you first of all for a super nice presentation and for answering all these questions. From our side, we have some remarks. On the 6th, 12th, and 14th of December, we will host the Future Grid Labs. Mentioned them earlier. We had some questions coming in about case studies of energy storage. This is exactly what we will do during these Future Grid Labs. We will look at energy storage really from a case study perspective. So people already working on applications there. Same we will do for grid-connected microgrids and floating solar PV. So if you want to know more about that, visit our site or drop me an email or well, come by during the labs. So for now, I want to thank Peter again and thank everybody for watching this webinar, and hope to see you this week on one of our other webinars or in December on our Future Grid Labs. Thanks.
Thank you all.